Good evening and thanks so much for tuning in. This is The Money Show on ET Now and my name is Alex Matthew. Now this show gets you everything that you need to know about your money, how to earn more of it, how to invest the money that you earn, and very importantly, how to spend the money that you spend so much time working towards getting. Now, on this program, we have a focus that is going to be given to land as an asset class. Should you buy it? Should you consider it as an investment? What do you do if you have ancestral land that is not really being utilized? We'll discuss that in the first part of this show. After that, we'll discuss the legal aspects of buying land. What do you need to bear in mind if you have identified a plot of land that you intend to buy? And finally, in our Travel Thursday segment on The Money Show, we talk about Lakshadweep, which, as you know, is one of the union territories here in India. It's off the coast of India, and it's certainly something that you should consider visiting. Let's start, however, with the first conversation of the day, and that relates to land. My guest is Roongta, who is a financial planner and the founder of Fee-Only Investment Advisers. Thank you so much, Harsh, for taking the time. And you know, I've spoken to you in the past about real estate. I'm drawing a distinction here. I want to speak specifically about land as an asset class. What is your opinion here about land? How do you view it?
I think, Alex, given all my public writing and all the views that I have expressed publicly, clearly I'm no fan of real estate generally. Okay, and land in particularly, I'm not really a big fan, and there are very clear reasons for that. I think if I just take 2 minutes to describe any investment, as we know, you can break it down into 3 parameters, right? Risk, return, and liquidity. And if you look at the risk element in land, I think the whole fable around land is this: invest in thousands and keep it for generations and reap in crores. Okay, and it presupposes that you will literally hold it for across generations, like 40 years or so, and then it will really give you riches beyond imagination, the thousands turning into crores. But when you do the numbers, neither on the risk front nor on the return front will it deliver. The risk is in land. Can you imagine any part of India where if you buy a plot of land and don't tend to it for say 30, 40 years, you don't go near it, etc. Okay, will it remain like land? I mean, it will get encroached. The title issues surrounding land in India are legion. Okay, so the risk element is very high, and obviously, to sort of justify that kind of a risk, your return expectation obviously needs to be high. Liquidity is extremely poor in land, so both on risk and liquidity, risk is high, liquidity is poor. Your return expectation obviously should be very high, which is rarely justified in land. I mean, even if you do this equation of, and we can do this quickly. If you had invested, say, 99,000 rupees in 1979, that's 42 years back, and it's worth, say, 1 crore today. By some miracle, it remained unencroached, the title is clear, etc. Now, what would you say to that? What would you say to that, Alex? I mean, it would sound like a great return, wouldn't it? I mean, it is a good return because that's about 11.5% roughly return. Okay, 99,000 rupees in 1979 turning into 1 crore in 2021 is a 11.5% compounded return, which is pretty good. Okay, not very easy to get. But if you but the amount of work you will have to do to get that kind of a return, to keep your land unencroached, etc., not having good liquidity in between. Same thing if you had put that money in the stock market, in the BSE Sensex, that would have been, and if you held on to it for 42 years, it would be worth 6 crores today, 6 times. So the risk, of course, there is risk in stock markets, but there is risk in land as well. And the liquidity in Sensex is much better than liquidity in the land. And very clearly, the return by far outstrips land. So as an investment, I don't think land makes sense. That's my opinion.
And here we're talking about absolute returns, Harsh, in that the equity markets, you're talking about investing at one given point of time, 42 years back, and that money being worth a certain amount. It doesn't take into account the fact that at various points you can add to that and you can buy on dips, and that itself can have a compounding effect. But besides that, if you're talking about land as an asset class, there's the other argument that people make is that, there are these developing areas. Take Palgad on the outskirts of Mumbai, or you have Panvel and beyond Panvel now in Navi Mumbai. These areas are very rapidly developing. So the quick turnaround of buying a plot of land over there, with the aim that at some point when development happens, you can actually either construct a building or get into a partnership with a developer and then sell the flats. Is that something that is still a no-no?
No, so there is no question of a no-no. I think it is basically to understand the risk versus reward payouts. Okay. I think the whole fascination about land is buying on the outskirts and the town expanding, it coming within municipal limits, and agricultural land being allowed to be converted into land meant for residential use or commercial use, etc. Now, this is a very long drawn process. I mean, and roads coming, metros coming, etc. That is what gets the value up. My point is, as I mentioned in the first answer to the first question, this is a long process. And if you have that kind of a long process, okay, your return expectation should be much, much higher. So I think that is one. Second are all the risks and the high involvement level. Yes, can there be a change there can be a jump up in the value when it converts from agricultural to non-agricultural land? Yes, of course there will be a jump up in value. But as anybody who has done it will know, it is a hugely high involvement affair. How many investors have the wherewithal to leave everything that they have and go after that local talati or the local revenue, everything done? It is not easy. People think that investing in land is a fill it, shut it, forget it kind of an option. I don't think land is that kind of an option. It's very, very high involvement if you are not constantly tending to it. And sometimes even when you are constantly tending to it, there will be all these encroachment issues that happen on land. And that is not true of financial assets. And that is the reason that, I have always recommended financial assets over land as an investment. I keep saying land as an investment, not as a luxury. If you are buying it for a luxury or self-use, building a farmhouse, that's a completely different proposition altogether. That's not an investment.
What about buying land as an agricultural asset? Because we've had commentators on our channel itself talk about the fact that they are now looking at investing in agricultural land, considering that they want to till the land and go back to the land. Of course, that seems like a bit of a dream, but from a financial planning standpoint, assuming that this land can actually earn you a little bit of revenue, should that be a consideration?
So I think it is the fantasy of every urban dweller to sort of live out in the open spaces, till his own land, get organic vegetables, etc. That's not investment, right? Okay. And ask anybody who has a small plot of land, agricultural land. Unfortunately, in India, agriculture is not a very paying practice. And that is one of the reasons why we see so much tumult around all the farm reform laws that we are seeing. But coming back to investments, any small returns you might get, possibly. Okay, one, it's not very high yielding. Any small returns you might get if you are a, what shall you say, if you're not a serious farmer, if you're dropping everything and you start a sort of a practice in organic farming, you're staying there, you're making sure it happens, then maybe it might be paying. I don't really have statistics around that, but that will be some one guy out of 10,000 people who will do that. The balance 9,999 are not going to leave their day job to do farming. They are hoping that something will grow and, I will make some money. Meanwhile, the land will also grow. So even if the example I gave you about Sensex, okay, that is bare Sensex. It does not include all the dividends given in the 42 years. And I'm reasonably sure, even if you take those dividends at 1.5% per year, I'm sure it will be more, but even if you take it at 1.5% per year, that will be much more than what you would have earned in the agricultural practice if you were a person who just let it be, if you let other people do that job for you.
Okay. And I like that comparison between the dividends that you earn from a company and the dividends that you earn from the land. Now, what if we're talking about a situation where you have ancestral land to your name, and this is land that is lying, shall we say, fallow or unused? It's a non-productive asset. What should the approach be then from a prudent financial standpoint, in that there is a bit of an emotional attachment to it? Do you have to draw a distinction there and be logical about something like this and say, hey, it's not doing anything, I might as well book out or sell it and put it to more use?
It's very difficult to be logical about something that you have a real emotional attachment to, isn't it? Okay. I mean, so there can be, say, a piece of jewelry, okay, that my parents have given to my spouse. Okay. I don't think, whatever be the financial consideration, okay, no matter what the price of gold becomes, etc., I doubt I will sell it or my spouse will sell it, unless we are dying, from hunger on the streets. Okay, it's a complete last resort sale. So I think, as we've seen in numerous Hindi films, I think that man's attachment to his ancestral land is very strong and that has value. So I would put that as an return. The emotional return you get by your bond to an asset is as much a return as a financial return. So clearly, I think you have to treat ancestral land differently. And therefore, there cannot be a single answer. It will really depend on how much you are involved with that land, how many other people are involved. Are you the sole decision maker or there are multiple decision makers, etc., etc.? Because then it's not just your view. It might have to be other people's view to be taken into account. In sum, I would say you should treat ancestral land a little differently. Then you would treat a fresh investment in land. Fresh investment in land is a conscious decision, whereas an ancestral land is something you have inherited with the attendant emotions and memories that you might have from that asset.
When we were discussing the topic, you also mentioned the size of land and the fact that, and to our earlier point where we were talking about agricultural produce, you mentioned something about a mango plantation, didn't you? I think our viewers will benefit from that analogy. What was it again?
So, I mean, this is a real life example. I was talking of the meagerness of the returns that you get from part-time farming or part-time horticulture. So, I have this friend who has a mango farm, okay, a agricultural farm on which there are mango trees, and he does get about 40 odd patties of mangoes every year from there. In good season, it might be 45. In a bad season, it might be 30. And all that he does is he earns a lot of goodwill by making sure that people like me get these farm fresh mangoes. So there is a lot of goodwill he earns. Money he does not earn. And I think most part-time farming is like that. You satisfy your urge to live in the open, you satisfy your urge to eat fresh produce to a certain extent. You get goodwill by distributing it to your friends and family. In terms of real money returns, that's not much. So, I mean, that is really the story of most people who do part-time farming.
I think to sum up the conversation, seemingly land is that one asset that you want when you don't have, and that you don't want to part with when you have it. And so, therefore, you can't really call it something that you want to invest in, because investment would then, the interpretation of that would mean that you aim to unlock value from it at some stage. Harsh, it's been an absolute pleasure speaking with you. And I'm just going to take the conversation forward in that after the break, what we will talk about is if you have identified a plot of land and you want to go and buy it, forget about all of the things that everybody tells you, the advice that people are giving you. If you've got your mind set on it, what are the legal aspects that you need to bear in mind if you are going to buy that land? Harsh Roongta, thanks once again for taking the time. It's been an absolute pleasure. Viewers, we're slipping to a short break. Do stay tuned.